Good morning, everybody. Welcome to my video update. Today is August 28th, 2013. Things we're going to talk about today are the economy and the events going on around the world which are affecting the economy and the markets. The first thing we'll talk about is Syria. Obviously, it's terrible what's going on over there, and it's just, after what you see on TV, it really is speechless. However, though, putting that aside, looking at the economic impacts of that, well, the first thing that comes to mind when there's a disruption in the Middle East is oil. We've seen the oil markets right now. Oil is trading at about $109 a barrel, which is the highest it's been in almost 2 years. That's not good for the economy. Some people are saying oil is going to spike to about 150, could go higher, not because of Syria, but because of the disruption of the flow with other regions in the Middle East or other countries in that region. Whether or not that's going to happen, we're going to have to see. One thing I can say is if oil does spike like that, it'll give us a very good opportunity to bet against it. And because oil, as we've seen in the past, it's very difficult for oil to stay up at these prices. And I think that could end up being something we could definitely profit from. We're also seeing some strength in gold. That has a lot to do with the uneasiness of what's going on in the Middle East. Right now, gold is looked at as another currency, and with all the countries trying to devalue the currencies to prop up their markets, we're starting to see more of a demand in gold. The only thing gold does make me nervous is because it is known as a hedge against inflation, and there is no inflation right now in the world, which, why is gold sending us a little, different messages, and probably something we should avoid in the short term. Also today, GDP came out in the U.S. for the second quarter, and it was revised higher. That was very positive. You would think the markets would normally, go up on news like that. However, right now our markets are 100% determined on what happens with the Federal Reserve and their bond buying program. Today, with the GDP going up, people said the Fed is going to, now they are going to taper in September, which 2 days ago they said no because the economy is not strong enough. Well, as you can see, the market went down as soon as they said they were not going to taper. The futures market was trying to figure out, okay, our stock, is this good news for stocks or bad news for stocks? And the real issue here and what we're seeing is that the markets are 100% based on what we're seeing with the actions of the Federal Reserve. That's going to have to just play out before we see the next move in the market. However, when looking at our accounts, we do have a little more cash than we normally hold. We did that because the market has gotten a little volatile, and on top of that, September is normally historically is not a very good month. And I've been reading a lot about saying, as people come back from vacations, especially we on Wall Street, that it could be a sign of selling to come. We'll wait and see. If we need to take more off the table, we will. If we see good buying opportunities, we'll do that. And with that, I want to thank everybody for tuning in. Have a wonderful Labor Day weekend, and thank you for being my client, and please call me with any questions. Have a great day.